Mark, do you feel like that's a good omen to have at this point where, you actually have to start looking at the numbers, not everything's going up in a rising tide type of environment that we saw in 2024 and even 2023 at this point, where you've got Nvidia up basically about, 4.5%, 5% or 4% today, and you're seeing some weakness in some other areas. AVGO is having a nice day today. So is that what investors have to start thinking about is, hey, I'm going to buy these things that are maybe underperforming because, Google Alphabet got down to what, $115 over the last couple of days?
Listen, smart investors, and when we talk to the folks on the trading desks at the big hedge funds and the prime brokerage desks, smart investors are buying these dips, right? Which is why 2025, as we've said before, is going to be characterized by higher highs and higher lows. So when these really expensive stocks have these corrections, and they tend to be significant. I mean, 8% on Alphabet, almost 9% on AMD today. Those are not insignificant moves for names at that level. And smart investors have been almost categorically taking advantage of those buying opportunities. And I expect that to continue. But I think it's less about that we think that it's time to start to anticipate who the winners and the losers are of the AI arms race, as I like to call it, and more about, hey, look, all of these names, most all these names are up so much. Are we that surprised to see some profit taking? Are we that surprised to see that sensitivity around these valuations? Nvidia, one of my favorites, a stock that we're bullish on, 44 times EPS. Is that an expensive stock? Of course it is. So don't be surprised when you start to see these little headlines. And we could talk about DeepSeek until the cows come home because I'm like on a rant on that one. But I'm not surprised to see these kinds of corrections or these kinds of sell-offs that are met often the next day by being bid back up. And I think we're going to continue to see that.
Yeah.
Investor anxiety that the AI expenditure bubble would slow down as businesses discover less expensive ways to achieve their AI objectives was aroused last week by the introduction of a new AI model from China's DeepSeek. Due to the widespread belief that businesses might not be investing as much in Nvidia's pricey AI processors, this caused a significant sell-off in the company's stock. However, there have been few indications of a slowing in spending as big tech earnings have continued to come in. Alphabet's announcement on Tuesday night that it would allocate $75 billion for capital expenditures in 2025 was the most recent example. That is more than the $57.9 billion predicted by Wall Street analysts. According to Laura Bratton, Alphabet, Microsoft, and Meta anticipate spending a total of $228 billion on capital projects in 2025. Compared to the approximately $150 billion those corporations reported spending in 2024, this is a 55% increase. Even if one believes DeepSeek poses a danger to those numbers, Alphabet's boost serves as a reminder that capital expenditure plans for AI and data center expenditures are still robust, according to Tom Lee, head of research at Fundstrat. In support of Lee's argument, Nvidia's stock, which supplies Alphabet with AI processors, rose more than 4% on Wednesday. In a letter to clients on Tuesday, Vivek Arya, an analyst at Bank of America, reaffirmed his buy recommendation on the stock, citing strong cloud capital expenditure intentions and a price objective of $190 per share. The spending intentions of Nvidia's major clients such as Microsoft and Meta have not changed as of yet, despite DeepSeek's alleged revolutionary optimizations, Arya said. The top platform for computing delivery is Nvidia. The surge in AI spending on Wednesday did not help all chipmakers. AMD stock fell almost 7% after investors were let down by the company's data center business outlook. However, Ruben Roy, an applied technology analyst at Stifel, stated that AMD's stock decline is more of a short-term, business-specific obstacle. According to Roy, there is still a significant long-term market for the chips produced by both companies. According to Roy, hyperscaler spending on AI infrastructure is still rising and trending to the right. And as that long-tailed investment cycle continues, we believe that many people will benefit. And in our opinion, AMD is unquestionably one of those benefits. Nvidia, which we also like, is in a great position this year and is still kind of our top choice for AI infrastructure computing. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
couple days ago, this thing got down to 113 bucks at this point. You say you like it here with the stock up 4% back above 123 mark. Is this what people have to start thinking about, where we know that there's going to be slower growth rates for Nvidia, but if they're talking about that they're sold out of their chips for the next year and a half, eventually you're going to have to start looking at valuations. You mentioned it's still got a high valuation, but not as high as maybe some of the other names in this space.
Yeah, I mean, a lot of analysts, and I tend to agree, think the valuation of this name is justified. I think it was a tremendously oversold condition on the DeepSeek news, which I found to be incredulous. A lot of folks that we talked to said this is not news. We were hearing rumors about this as early as the third week of December, or even beginning of January. I think this was a lot of reason for market watchers to put a face to what was otherwise a momentum-driven correction. We saw a very significant sell divergence indicator on our technical charts that we watched on Friday that was indicating that we were going to see that sell off on Monday morning. Had nothing to do with DeepSeek. So I think Nvidia got way too much of maybe the baby being thrown out with the bathwater on that one. Most of the streets expecting at least 30%, if not more, growth between now and the end of the year. As you mentioned, their Blackwell chips are more than 100% accounted for. It's sort of like they've gotten into the airline business. Let's just, sell more than we have and figure it out after the fact. And they are, as it turns out, I think, continuing to be one of the clear leaders when it comes to chips that are powering that AI revolution. So is it expensive? Sure. Do I think it has room to go up from here? Yes, it does.
The introduction of DeepSeek's effective generative AI model has caused a decline in Nvidia's stock price during the last 2 weeks. Many investors believe that companies like Nvidia, which provide this computing power, are in trouble because DeepSeek reportedly trained its AI model for less than $6 million. This is because the AI hyperscalers will not spend as much because more efficient computing methods are available. Although this is a logical line of reasoning, I don't believe it to be true because there are several signs that Nvidia will be all right. Investors would be wise to take advantage of the current drop of Nvidia stock for the 3 reasons I have listed. The idea that US AI hyperscalers are obsessed with efficiency is the largest mistake made by investors who believe that Nvidia is doomed because more effective AI models are becoming available. DeepSeek made the decision to improve the efficiency of its model because it was forced to. Due to stringent US export limitations on Nvidia's hardware to China, DeepSeek is constrained by the amount of processing power it can access. Therefore, instead of using the more potent H100 GPUs that are often utilized in the United States, DeepSeek had to train on H800 GPUs. The outcome was inherently efficient as it had to concentrate on efficiency in order to create the model. These same restrictions do not apply to domestic AI companies because they are exempt from legislation and have access to nearly limitless computer capacity. In order to create the most potent AI models, they are expanding computer capacity rather than concentrating on efficiency. Because of this, projects like the $500 billion Stargate project and businesses like Meta Platforms are investing between $60 billion and $65 billion this year in capital projects, the majority of which will go toward AI processing capacity. There shouldn't be any concerns about Nvidia's sales slowing down in 2025 because these businesses will continue to spend a ton of money with the company throughout that year and beyond. Nvidia's next-generation Blackwell architecture is another breakthrough. The Blackwell architecture is capable of training AI models 4 times faster than the Hopper architecture of the previous iteration. Many businesses are attempting to acquire these GPUs because they provide an amazing performance gain. However, Nvidia is currently unable to keep up. During the company's Q3 conference call on November 20th, Nvidia's CFO Colette Kress stated, "Blackwell demand is staggering, and we are racing to scale supply to meet the incredible demand customers are placing on us." Nvidia is still achieving this growth engine, which bodes well for the stock in 2025. Nvidia has never appeared to be inexpensive during its existence, but I am prepared to say that it has come very close to that point. Trailing earnings metrics aren't a good approach to evaluate Nvidia's stock because of its explosive growth. Therefore, I'll utilize the forward price-to-earnings (PE) ratio for Nvidia. Nvidia's stock now only trades for 26 times anticipated earnings as a result of the steep decline. That's quite affordable for the growth that Nvidia is exhibiting. In contrast, the S&P 500 trades for 22.3 times forward earnings, meaning that Nvidia isn't really that much more expensive than the market as a whole. This is true even though Nvidia is at the forefront of a generational technological transition and several growth catalysts. Since Nvidia rarely goes on sale like this, I believe it's a good idea for investors to get in now, given the company's stock is down more than 20% from its peak. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Now, the second one is Nvidia. Why? Because the Supermicro news also affected Nvidia. What also affected Nvidia today, it's currently up about 2.9%, is Google Alphabet's $75 billion announcement in CapEx spending that may be contributing to Nvidia's on the upside. Remember, here's the stats from this earnings season. Microsoft, $80 billion in CapEx spending for fiscal 25. Meta Platforms, $65 billion. Now Google Alphabet, $75 billion in CapEx spending. So the paper money trade we looked at for Nvidia, remember this stock has sold off, the last few weeks from as high as 153, now then into 140s, and now it got as low as, in the teens for a while there. Now it's sitting around $122. By the way, the 200-day moving average, $123. Watch for that number, pretty significant there if you're a technician. Okay, so the paper money trade we looked at going out to the March 7th expiration. Why is that? I'm going to talk about that in a minute. Remember, it's got earnings on the 26th of February. So I went past that to the March 7th expiration and bought the 120 call. Sold this week's February 7th 125 call. The debit on that, about $9.25. Let's see if it's moved. No, it's about $9.20 right now. So this is, again, both trades, call diagonals, both trades. The risk is defined by the debit paid. Both trades, you're going to have an opportunity to extend duration on the trade if you so desire to do that. So call diagonal in Supermicro, call diagonal in Nvidia, both collecting theta, both risks defined, both targeting a short strike above where they're trading right now. So bullish trades in Supermicro and Nvidia.
Early winners of the artificial intelligence AI revolution include Nvidia and Palantir Technologies. Their stock skyrocketed in the triple digits last year. Palantir jumped 340% for the biggest gain in the S&P 500, while Nvidia advanced 171% for the best performance in the Dow Jones Industrial Average. Additionally, Nvidia and Palantir were recently invited to join those indexes in 2024, indicating that these businesses are among the leading forces in the economy. Due to the demand from AI customers, both of these tech giants have posted record earnings. Since we are still in the early stages of the AI story, with the $200 billion AI market currently predicted to rise to over $1 trillion, much more growth may be in store. And that lends credence to the notion of purchasing these two elite players. Which one, however, is the better AI purchase at the moment if you could only purchase one? Let's investigate. Because it has established an AI empire, Nvidia is the firm that most of us think of when we hear the term artificial intelligence. In addition to being the top supplier of graphics processing units, GPUs, which are AI processors that enable crucial functions like model training and inferencing, the tech behemoth provides clients with a wide range of AI goods and services. As a result, Nvidia is now a one-stop shop for all things AI. The largest tech companies in the world, like Microsoft and Meta Platforms, are among Nvidia's top clients since they require the greatest tools in order to succeed in the AI market. Because of this, Nvidia's most recent product, the Blackwell architecture, is in greater demand than it can provide. The firm anticipates that the product will bring in several $1 billion during its first quarter of commercialization, which ended in late January. Speaking of earnings reports, Nvidia has exceeded analysts' earnings projections for at least the last 4 quarters and has recorded sales gains in the double or triple digits each quarter. On February 26th, the AI behemoth will reveal its most recent financial results, which will likely spark stock performance in the near future. Palantir is a software firm that assists clients in compiling their data and using it to automate processes, make important decisions, or take other actions that may change the game both now and in the future. This player used to be mostly linked to government contracts, but in more recent years, commercial customers have become a new source of development. One product that Palantir introduced in 2023 is especially well-liked by customers. By applying big language models to clients' demands, the company's artificial intelligence platform, AIP, transforms how they use their own data and harnesses the power of AI. AIP, for instance, is being used by a multinational insurance company to automate underwriting procedures, cutting down the time required for the task from 2 weeks to 3 hours. The customer increased their contract by almost $11 million last quarter after realizing the efficiency advantages. Palantir has experienced rapid growth as a result of all of this. Both government and commercial revenue taken together are increasing by double digits. Additionally, Palantir stated in its most recent earnings report that it anticipates U.S. commercial sales to reach over $1 billion this year, an increase of at least 54%. This continued momentum has the potential to keep this already soaring stock at an even higher level. It is obvious that both of these businesses have what it takes to keep expanding rapidly. Since the development of AI infrastructure is still in its infancy, there should be a continued high demand for Nvidia's GPUs. Furthermore, as businesses adopt AI in their operations, Nvidia should profit from its wide range of products throughout the next phase of AI growth. This new phase of AI development could be significant for Palantir. With Palantir's platform, businesses can easily employ AI to alter their operations, saving money, time, and possibly even generating new discoveries. Many of the software company's current commercial clients have boosted their work with it as a result of realizing this. Therefore, choosing between Palantir and Nvidia is difficult. However, we may benefit from one important component, which is value. From the standpoint of the forward price-to-earnings ratio, Nvidia's has dropped to its lowest level in a year. At the moment, Nvidia's stock is trading at 26 times projected earnings forecasts, while Palantir's is trading at 171. This valuation seems extremely low for Nvidia, a business that has the capacity to provide substantial growth over time. Additionally, the chance to take advantage of this deal could not last long. Therefore, Nvidia is currently the better AI investment, even if I think both of these reputable firms are worth buying. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.